Hey guys, welcome to the Red Door Property Management Podcast, where we talk about everything real estate investing here in the Indianapolis and surrounding suburbs. And we've done all the hard work for you. We are about to dive into the February 2025 market reports. My name is Chris Knight. I'm the business development manager here with Red Door Property Management. And as you know, I'm joined here with Mike Taylor, broker, owner of Red Door Property Management. Mike, how are you doing?
Excellent, Chris. Man, it's like 70 degrees today. We're talking about February, but spring has sprung here. Man, I'm like so excited. It's warm, it's
Okay,
sunny. I love it.
beautiful. Beautiful. You never say spring has sprung here in Indiana. All right. We all know that it could be a blizzard by the time this sets this evening.
It does. My wife and I always, it's like during March Madness, it always snows at least one time during March Madness. Like you think it's like, oh yeah, I'm ready to like plant the garden, and then it snows, you know?
You know what always happens? So around this time of year, I always get excited like everyone else. The sun comes out. It's like, oh man, this is the year I'm going to do so well on my yard. It is going to look so green and beautiful. And I start off great, and I did again this year. But normally I'll fertilize the yard, and then the next day we have this major storm that comes through, and it like washes all the fertilizer. The $70, $80 bag of fertilizer I just bought and put
Exactly.
down in the yard completely washes away. And I'm like, screw it, I'm done. I don't care, whatever. So I've done it again this
Uh,
year, although I timed it really well. So I put the fertilizer down, light rain came in, and
Perfect.
I think I'm gonna have the perfect yard this year. All my neighbors are gonna be jealous. I can see it
Excellent.
already. All right. Enough of that stuff. Let's dive in here. So we've made a couple of attempts at this already to do these market reports. We noticed some of the numbers were a little skewed, so we wanted to make sure that we were giving off the most accurate information that we can every single month. So we went back to the drawing board. And let me tell you, it's a good thing that we put in all the hours that it takes to put these market reports together for you, because there is a ton of data here
Yep.
that well, I mean, frankly, it just takes a lot of hours to compose all of this data and put it in a nice little graphic for you, which you can find on all of our social media channels. There, right at the bottom of this graphic, you can see all those nice and neat. If you haven't already, be sure to like and subscribe to the YouTube, as well as the Facebook page for that matter. But the YouTube, and that's where all this awesome content comes out. Now, a few days ago, we did also shoot some economic news that's kind of happening in and around the Indianapolis area. We try not to bore you with that information, so it's just a couple of snippets that might be happening, and we do drop that every single month. We did the same thing this month, as well as I'm dropping a little bit of tidbits on new owner inquiries. Now, when I get phone calls, as I do every single day, from new owners and new investors or even experienced investors, and they ask questions about inquiring about our service. So be sure to check that out. Some common questions and then some realistic answers that you might not have considered prior to you. All right, enough of the boring stuff. Let's jump into the February 2025 rental market analysis here. We're also going to get into the sales market as well, which, as you know, is some new information that we're dropping on these just to keep you fully informed. I'm going to be quiet. Mike, give us some information here on the Indianapolis February market.
Yeah, I mean, again, this is February's data. I know we're recording this in March, and who knows when you're watching this, probably in March. But so this is February's data, which is one of the slowest months here in Indy. And I got to tell you, I'm pretty encouraged. I'm pretty happy with what I see here for the February's numbers. The active homes 1,067. That's actually down a little bit from last month. And again, those guys who have been watching this for a while know that this is a new graphic and some new data points. So we don't have the year over year information in there because this is a new source of data. So we'll have that as time goes on. But for now, we don't have that. But anyway, inventory is going down month over month, which is always a good thing. Less inventory is less competition. That's always good. Average rental price heading in the right direction, both month over month and year over year. So just up slightly since last month, and then year over year up just about 2%. You can if you can see on there a little sneak peek into March. If that holds true, we're going to see a big jump in March, which as you can see from last year's graphic down there in the bottom left, typically as time goes on, as we get into the busier season, the average rental price typically goes up and then peaks, midsummer, and then kind of comes back down in the winter. So I would expect to see more of that. It looks like we're kind of onto a normal trend, which is nice. And then speaking of nice, 49 days on the market is not amazing, but for February, that's that's pretty decent. It's respectable. It's I would say acceptable is what it is. It's and look at that, it's down 14% month over month. So while not the best, pretty darn good for February. And I expect to see that also go down as we kind of get into the spring and summer leasing season. So that's a great place to start, as opposed to last year we had that crazy wild ride with days on the market. So it's good to see some normalcy returning to the market here for days on the market.
Yeah.
Price per square foot. This is a new data point that we're tracking. Most of the time, this is more of a multifamily number, but we're putting it up here. So we're going to track it for single family, which is the top line here, and then also for multifamily and townhomes. So for single family, $1.16 per square foot. And then the middle two graphics there. These are again new for us this year. The top one is apartments. So there's 791 apartments available for rent right now in Indianapolis, and the average rent on that is it's 1,044. And then of course you're going to see the average price per square foot much higher at $1.52, because typically apartments are going to be much smaller than a single family home. So that's why you see that huge differential there, and way more on a price per square foot basis. And then the second one there is townhomes or condos. There's 118 townhomes or condos available for rent. Average rent on that almost exactly the same as single family. So 1619 versus 1625. Days on the market is very similar, and price per square foot is very similar, with 52 days on the market and $1.22 for the price per square foot. Let's see the three graphics at the bottom. I mean, really everything is up year over year, which is good. I'm going to focus mostly on the single family homes. I think that's what most of our investors invest in. Some townhomes as well, but they're looking good. And sneak peek in March is also looking good. So I'm pretty pleased with the Indy stats here for February.
Yeah, same here. Some of these numbers are trending, and I'm trying to keep my comments like I was just stating at the front end of this podcast, is that we've attempted this a couple of times. So right now we're just trying to get the numbers out to you guys so that you
Yeah.
can consume it and then make informed decisions. But sometimes I have struggled at holding back some of my thoughts on the current market. So average days on market at 49, like Mike already indicated, that is down from the previous month, which was at 57. Which isn't all that unusual, right? We're getting into some seasonality here. Boots on the ground is what I like to say when I reference what I feel like Red Door is currently experiencing, which without a doubt, I feel like applications have ticked up considerably. Now,
Yep.
what I want to mention here is everyone is pretty aware, I think, at this point, whether you're in the industry or not, what's going on with the real estate market. And the sales market is essentially coming to a freeze. And so what that typically does is people still need to move for whatever reason that people move for, right? Job change, moving close to family, whatever that is, people are still going to move. So I expect that to continue to drive the rental market to a very strong market, right? I think it's going to have a strong impact on the rental market. It's going to continue to it's going to continue to create a strong rental market. I think I've driven that point home, but and that's because nobody's going to be able to uh, sell or purchase a home. So anyway, any comments
Wow,
on any of
really,
that?
really doom and gloom on the on the sales market there.
I mean, I do. I think the sales market's going. Yeah, I think it's there's a bunch of turmoil going on in the sales market. And I don't think that's any secret, right? There's nothing going to happen with interest rates in the short term. And sales prices are still high. I mean, as it continues
No,
to
you're
slow,
right.
maybe they'll come down. But anyway, yeah, I am doom and gloom on the sales market.
No, you're right. I mean, it is there is a shift happening for sure. How bad it's going to get, who knows? We've had that discussion before. I think you're a little bit more pessimistic than I am. I think it's going to be a little bit more balanced, but you're right. Interest rates aren't going anywhere. Sales numbers are slowing down significantly. We're going to see that here in the next couple of slides. So you're right. I mean, there's definitely a shift in the market taking place right now.
I think that covers it. So I think that just reflects in some of these numbers. And what drove me to that thought was looking down there at the average rental price over time, the single family homes, as it indicates that sharp incline there coming into March. And I think that's probably why. So that's the reason I just wanted to mention it, and I felt so strongly about it, is because that steep incline into March, which, as we mentioned earlier, I think is a little bit earlier than seasonality typically affects. So there it is. Let's move on. Let's get into the sales numbers and see what that indicates. Maybe I'm right, maybe I'm wrong.
I think you're going to see that you're right on the sales data. So this is again February of 2025 closed sales. Okay, and when we look at these, we look at this from an investor point of view. So we put a price cap of $500,000. So we don't even look at homes that are over 500 because if you're investing for a rental, most likely you're not going to purchase a home that's over 500,000. It's just not going to cash flow. It's just 99% of our homes. Well, 95% of our homes that we manage are under there. So that's why we put that cap on there. So anyway, in Indianapolis, the average days on the market is creeping up. Look at that, 65 days on the market for homes that sold in February. That is up 22% month over month. That's pretty significant. Average price per square foot is $159 per square foot. And so that's actually an increase in month over month and year over year. Obviously following suit is average sales price $244,655. Again, up just a little bit month over month and up, almost 6% year over year. And then 686 of those homes sold. So there's lots and lots available. So, I mean, I say this every single time, but that is such an affordable price point for here, anywhere else in the US. I mean, that is super, super attractive. I think that's why Indy is the number 2 place to invest in per Zillow, or was it just the number 2 real estate market? I think is what it was. And I think that the affordability goes a long way towards that. So 244, what an affordable sales price. And we got a couple of graphs here on the bottom. One of it just kind of price over time. The gray one is last year, 2024. And again, we do see that same seasonality of up and down for spring and summer that we do in the rental market. And then what's good news is we're starting off the year. Everything is over last year. So, everything I'm reading, Chris, is that sales are going to slow down. And probably days on the market are going to go up, but also prices are going to continue to climb. And I don't think it's going to be drastic. I don't think it's going to be through the roof. It's probably going to slow down quite a bit, but everything I'm reading is that's going to be the trend: slowing down in sales, less sales, but average price still creeping up a little bit. So I don't know if we're going to see a huge relief in terms of average sales price. Let me just finish this last thing, and I know you got something to say.
But when we got into last month's sales market report for Indianapolis, we were looking at a month-to-month decrease of about 0.25% on the average sales price, but the homes sold month over month, we were looking at down 27% last month. Okay, this month we're seeing it's up 15%. So that means it's still down from where we were in December, but you are up almost approaching 16% as far as the number of homes sold, which is probably a little bit of seasonality. But honestly, that's not where I expected to see the sales data indicating. So this is new information that we're reporting on. We just started this year. I know we've already heard from a ton of people that you're loving the sales info right along with the rental info. So be sure to mention in the comment chat if you are enjoying this, or if there's any other information that you'd like us to report on along the way. But this is awesome. It's not defending my argument, I will have to admit, so far. But look, we're still early on it. I'm not ready to give up my stance yet. We'll see where we are next month.
Well, and it is, year over year, it's down 6%. So that does kind of go to your in terms of number of homes sold. So
That's right.
It's cool that we're doing this data at such a interesting time in the market, because it's going to be fun to watch and report on this as it kind of unfolds live. You know what I mean? And then
Yeah.
it's cool. So I'm really glad we're adding these sales data.
I know. I love it. All right. I'm going to jump into the next market here. We're going to keep this thing
Let's do it.
rolling. All right. Fishers. Okay, so I was just talking to somebody yesterday, an owner actually. So if you're new to the Fishers area, you might not have heard, but the local government is trying to institute a 10% cap on rentals here in the Fishers area. So whether they get that passed or not, it is in motion. A lot of people do expect it to pass, but the person I was talking to yesterday loves the Fishers market, even has the exact same understanding of the market. And I was like, have you been watching our market reports? Because his opinion on the market was exactly what we've been reporting, where Fishers historically is a really good market because there's really good quality applicants in that market, but the days on market really haven't been, they've been on the higher end of all these suburb markets that we're kind of reporting on. So anyway, his understanding of the market kind of surprised me, right? He's not a realtor, he's just an investor in the market. But anyway, he was trying to pick up as many properties in the Fishers area as he
Mm.
possibly could before that 10% gets instituted. So I mean, he's even paying, higher than he typically would for an investment property. He didn't really care. He's just trying to pick up as many as he possibly can, and he is going to park those here with Red Door. But there's no surprise to that, right? I mean, if you're a smart investor, you're going to put them Red Door. Go ahead.
Well, it's a great idea. I mean, if that gets passed, I mean, that is an absolute cap on your inventory. I mean,
Yes,
you
your
can only
competition.
have X amount of rentals available. And so, I mean, wow, that's if you're an owner and you already own those homes, that is an amazing thing. So, I mean, it's kind of a, I don't know, a double-edged sword or whatever you want to call it. But if you own a bunch of homes at Fishers, you're probably praying for that thing to get passed, you know?
Absolutely. So and I'm just curious. I saw your hand go up. Did you have somebody walk in the room?
Yeah.
I'll have
My
yeah.
daughter tried to come in here. Yeah, of
I
course she
just
did.
did a thing. Taylor tried to walk in. I'm like, out, out. Yeah. So there you go. Okay, yeah, you can tell we're professionals, and we want to keep it professional the whole time. So I'm gonna get into this market report, but that's what's happening in February, are in the Fishers market. So if you enjoy Fishers as a market, which I do, I mean, I know I've bashed Fishers only because the numbers kind of make it hard for an active, certainly a new active investor. But Fishers is just a solid market because good quality applicants, low vacancy, and certainly low turnover costs are exactly what you're going to find here in the Fishers area. So here we go. Here's the data. Number of active homes currently in the market is at 75, which is down from last month, which was at 86, which indicates a month over month down from almost 13%, but 12 and three quarter of a percent as far as active homes. Average rental price at 2250, which is up just over 7% month over month, and still up year over year. Average days on market is at 47, which is completely unchanged from the prior month. We're at 47, almost identical to where we are for the Indianapolis market, which is not typically something you see in the Fishers. Typically, it's a higher average days on market, at least for the last 12 months. It has been. Average price per square foot up almost 2% year over year, or excuse me, month over month. Now, here's the surprising thing is if you get the sneak peek. Now, I want to remind everybody that we pull this data, the March, the sneak peek into March there is very early data, and that could very easily change by the time we report on March's numbers. But it's hard not to look at that slope because it's
Yep.
there. Um,
Yep.
so we have the incline as we get into February, which that's what we're reporting on. That's why we're up 2250, up just over 7%. But it's going to be very interesting to see what happens in March. Seasonality is a major factor for real estate in general, and it's no different for the rental side. So we'll see if it continues to tick up on your single family homes. As far as apartments and condos, now I'm going to skip back up. I'm going to get away from the graphs, go back up to the apartments there. So Fishers isn't really known for an apartment community, but you have 17 active apartments currently on the market, averaging at 1698 as your average rental rate, at $1.36 for your average square foot. And now condos, 15 active condos on the market, which is lower than I would have expected, to be honest with you. It's 2288, which is higher than your single family home average rental
Yeah.
price. 59 days on the market and $1.20 per square foot. So you're getting a little bit more per square foot if you're looking at condos, which is what you're going to need because a lot of those condos are going to have higher HOA dues right along with them.
Yep.
And then you're going to see the graphs there below. And just a reminder, as we throw these graphics up on all of our social media channels, they're listed at the bottom of these graphics. You're going to see a sweet little graphic where we compile your average rental price for single family homes all in one nice and neat graphic, where you can consume all that all in one nice, neat graphic. So, Mike, anything to report here on the Fishers rental data?
No, not too much. Honestly, I was just going to make a mention to just make sure you guys stay tuned to our channels and to our socials because we will be following that the Fishers story for the rental cap, and we'll be talking about it and dissecting it and letting you guys know if it does pass. I think if I remember correctly, there is currently a grandfather clause in there. So if you have a rental home currently, it would be grandfathered in. it doesn't transfer to a new owner. But anyway, we'll discuss all of that as it does unfold. If it does pass, we'll kind of be sounding the alarm bells and saying, hey, it might be time to pick up some homes at Fishers because your competition is going to be limited. So anyway, just stay tuned for more info on that as that unfolds.
Yeah, yeah. And that'll be interesting on the sales slides as we continue to follow that because I would imagine as that news is coming out, it's had the opposite effect for at least the short term, right? Because I know this investor isn't alone, and I know that American Homes for Rent and Progress, all these major rental companies, I'm sure they have the same idea. They're probably scooping up everything they can as quickly as they can. It's like a
Yep.
good portion of the homes and Fishers could be rentals by the time they get that thing passed.
Well, it might affect the sales data. We'll have to watch that over the next couple of months too, you know?
Yeah, it's gonna drive up prices, right?
Yep.
Okay,
Yep.
I know. That's the same thing that they were trying to avoid in the first place. All right, here's your sales data for the Fishers market. Average days on market for a property on the sales market here in Fishers is at 45, which last month we were at 54. So we're down. Homes are moving a little bit quicker here in the Fishers area. Average price per square foot, $183 per square foot, which is up year over year, down just over a 0.5% month over month. Average sales price at 366, which is up another 6%. And keep in mind that is the investor point of view that we use. So any home that is sold under the $500,000 price point is included in there. So investor point of view. And homes sold way up 33% month over month. That is huge. Up 30% year over year. Wow, that is huge. So 68 homes sold at this point, February 2025. That's
That's
crazy. Average
wild.
sales price over time. Yeah, let me just mention graphic here, Mike, and I'll let you comment on that however you would. But that's hard to swallow. I mean, that seems like a major increase.
Yeah.
Um, and so average sales price over time, we're ticking up. You look at that slope, which seems pretty consistent, or we're just a little bit early, considering where we were last year. So that graph is going to be awesome to follow as we continue. And then don't disregard the graph there in the bottom right hand corner, which is an awesome little graph. It tells you exactly how many homes have been sold over the past year in exactly what price bracket in
Hmm.
that investor point of view. So a really cool little graph that we came up with for everyone, really by request. But there it is. Mike, what do you have to say about any of that?
I mean, Fishers has always been such a strong market. I think we're going to see prices continue to go up here. Um, I like it as a market. It's a good fundamental market. On that graph on the right, I think I've said this before, but I really like that graph because you can see like there are even homes under $200,000 in Fishers. I mean, not a lot of them. There's 7 sold in the last year, so they're probably a really small condo or a fixer upper or something. But they do exist. And then there's 30
Yeah.
that's sold in the 2 to 250. So I mean, they're probably going to be small or condos or something like that, but they are available. You look in there and say, oh, the average sales price is 366. That's a lot. What? Well, there's still like, I mean, even under 300, there's almost 200 homes that sold under 300,000. So anyway, I like that graphic for that point of view. You can see kind of where everything lies.
Yeah, it's a really good point. Exactly. Yeah. So if you still want to get in the Fishers market, but you only have 250 to 300 to spend,
It's
not
doable.
366, it is absolutely doable. Yes, you just need to
Yep.
make sure that you're connected with that your group is an experienced real estate agent that you're working with that can hopefully help you locate a property in that price. And if you need help connecting and putting your team together, reach out. I'm happy to assist. We have everything from lenders to real estate agents, experience with working with investors. Reach out. Happy to be part of that team and help you build that team right along the way.
Yep.
Okay. I think that wraps up Fishers. Let's jump into our next market report. Noblesville. All right. This is one that I'm always more excited about, which everyone already knows. So, the Noblesville February 2025 market report, we're going to jump in. Number of active homes, we have 75, which is up from 73 the previous month. Average rental price at 1948, which is the first one that we've seen actually down month over month and year over year. That is surprising. Let's see if that continues as we get into March 2025 market report next month. Average days on market, 46 days on market. So that's ticking down right along with our previous market reports. And our average price per square foot is not far from where we've discussed so far. We're at $1.05 per square foot. Now, where it gets a little squiggly there is in that bottom graph, which, oh, don't let me skip over the apartments and townhomes, which I tend to do here. Apartments, 23 active apartments here in the Noblesville community, 1766 as your average apartment rental rate, 51 per square foot, and condos 2350, which is again higher than your single family homes. There's a trend there for sure. 88 days on the market for a condo in Noblesville, so
Yee.
I would avoid those at all cost, and 91 cents per square foot for a townhome in Noblesville. Now, the single family homes graph their average rental price over time. Now, this is the only one that's got that slope down as you're getting into February, which is really surprising. Any insight into why that might be in Noblesville?
I don't know. That graph does not make any sense to me at all, this year or last year. I mean, look at last year. Last year peaked in February. That we just don't see that. That typically is like June or July when you see that peak. So that graph honestly makes no sense to me. It
No,
doesn't. It's
look
like
right
what
down there.
what market peaks in February? That just doesn't happen. So I don't know.
Yeah,
That's weird to me. That's why it's like I was looking at that data, and the average rental price is down 13% year over year. I mean, at the face of it, that is shocking. But you look at that graph, and like, something weird happened in January, February last year. I don't know. Something
yeah.
weird.
Yeah, I agree. Yeah, yeah. Hopefully, it's a little bit more stable of a single-family home average rental price over time graph. And just a reminder, I mentioned this in the Fisher's Market Report, but as we break these up, that graph will be in a nice, neat graph compiled with all of the other markets that we report on for your consumption. So just be on the lookout for that on all of our social media channels, which you can find there at the bottom of this graph. I think
So are
that
you
does it.
seeing?
Go ahead.
Are you seeing? Let me just follow up on this, and I think we've seen this in, if I remember Westfield, we're about to see it, but um, that townhome, the days on the market is like out of this world, like crazy high. And if I remember, we saw the same thing in Westfield maybe last month. Are you seeing that on the ground? Like one, higher end townhomes, and then two, it appears, I mean, from this graph, it appears that those are hard to rent.
That's a very good question, and yeah, yeah, we are seeing that on the ground now. We don't see condos coming in as quick as we see single family coming in as far as new onboarding of new owners
Yeah.
here recently, except for the Westfield market,
We've
which
had
I
a
think has
couple in
slowed
Westfield,
down.
right?
A couple in Westfield, which, as everyone knows, and again, I give our podcast here a lot of credit for having a direct impact on these markets, because of course, why wouldn't it?
Obviously.
But the Westfield market has become really saturated with condos, driving down your average rental rates, and I mean, thanks to having Red Door informed on a monthly basis, our owners were ahead of it. They were reducing their rents, placing tenants a lot quicker than the competition, but it was driving down rental rates nonetheless.
Yeah.
And
Yep.
and so I think it's just getting harder to. I mean, it's getting harder to cash flow in a lot of these markets in general because of interest rates. But condos, I think even more so. It's just getting harder to cash flow in your average days on market because the pool for interested applicants is just a lot wider for those interested in single family homes more than condos.
Yeah. I think it just also
So
goes to show you really got to dissect the data, and I like the way that we do this here to show it is important. Like if you just
yeah,
say, "Oh, average days on the market in Noblesville is 46." Well, if you have a high-end condo, it's a whole different story. You know what I mean? And so it's you're 88, so you need to really be a little bit more of aggressive stance. So anyway, that's all I wanted to point out.
yeah, I'm glad you did. And I'm just looking at last month's market report as well. I mean, the condo rates, the average rate for a condo is ticking down month over month
Makes
at a
sense.
faster rate than your single families, and your average days on market is consistently higher month over month when compared to a single family home. So yeah, I mean that's a good comparison. We'll have to continue to watch here in Noblesville.
Yeah, cool.
All right, getting into your sales data here for Noblesville, your average days on market. So even ticking up. Wow, Noblesville is just a different reports all the way around on the rental side as well as the sales side. Look at our average days on market up almost 50% month over month. Last month we were at average days on market at 35. This month we're at 52. Your average price per square foot is ticking down at 167. And here your average sales price is down just over a half a percent at 342. 513. Now, the only thing that's a little bit stranger is your home sold is up 7% month over month. But although, man, yeah, wow, down. It's down 15% year over year.
Hmm.
I don't know. We're gonna have to keep our eyes on Noblesville for sure. Average sales price over time. Now you'll see those lines, which is shocking to me. It's almost merging with last year, which of course makes sense when we're looking at our number of homes sold down 15% year over year. But as far as your average price, man, we are almost right in line with where we were last year. I can't wait to see if this is going to stay consistent as we get into March. Number of homes sold, awesome little graph there for you to consume. It's our investor point of view, which is any home that's sold under the $500,000 price point. It kind of shows at what price point you can enter this market at. So there's homes available, like Mike indicated there on the Fisher's report, that there's homes for sale in the 200,000 to 250,000. There's homes for sale in 250 to $300,000. So this market is you can get into this market for different price points.
Yeah, and I think just on that graphic there, you can see, in my mind, Noblesville's always been a little bit more of a value play over Fishers,
Right.
but the average sales price has merged. It's almost, I think, pretty close to Fishers. But this graph, you can see that there's actually more affordable homes. Like if the one we just talked about, there was only 7 in the 0 to 200 range. There's 25 that sold in Noblesville in that price point. I don't remember what it was under 250, but I think there's more here. So you can see that Noblesville is a more affordable market. It is. It just is.
Yeah, but you're right. I mean, yeah, comparing that to the Fisher's market, I'm just looking at last month's market report because it's easy for me to access here. But last month, our average sales price at 345.
For Fishers?
Yeah, for Fisher's.
Yeah. I know all those like
Wow.
Northside ones all kind of like converge at that 350. Now we're putting the cap of 500 on there, right? So
Right.
you got to remember that this isn't kind of like just all sales for the entire city. It is under 500,000. So that makes a little more sense.
It's a good point. It's a good point. Yeah, I think that wraps our Noblesville market report for the rental and sales market data. Be sure to comment in the chats and comment section if you have any questions about this market or any other data point that you're interested in seeing as we continue to cover these. But I think we're ready for the next market. Ready?
Let's do it.
Westfield.
My ex favorite market is
I've
now
been there.
Westfield.
I've been there. It takes a while to recover. But hey, there's always hope. There's always hope.
No, I'm just joking. Westfield's still a good market. It's just not a market that if you're going to buy a new home in right now, you're most likely not going to be able to cash flow. That's just the reality. Prices have driven up. I mean, rents have also followed. Don't get me wrong, but prices have driven up, and of course, rates are affecting everybody. So I don't know. I'm probably not buying a brand new house here unless I just want to own in Westfield. I think it's a good play. It's going to be a great community. This is a long-term, amazing community. So much going in there, so much development. So a little bit of a joke, but let's get to the numbers here for Westfield. So 66 active homes. It's exactly the same as last year. Average rental price, look at that, man, $2,500. I remember like a couple months back, remember we pulled up the history of it, and it was, I mean, like $1,700 was I mean, this thing has just shot through the roof over the past couple of years.
Yeah.
So I don't think we have that runway in front of us. I think probably if you own a home and have owned a home, you're loving life in Westfield. But still, look at this month over month. That's up 4%. Now that is down 7% year over year. Average days on the market. We've been talking about this for a while. Westfield is a struggling. 76 days on the market. That is brutal. That just eats into your return if you're an investor. So if you got a home in Westfield, you're going to probably have to be a little more aggressive on price than you may want to be, especially here in the short term as we kind of try to get out of the winter season. So again, good, bad, or ugly, we kind of talk about the numbers, whatever they are. And this is kind of an ugly number. 76 days in the market is not great. And then average price per square foot for a single family home in Westfield is $1.19 per square foot. Just going over quickly, I guess not too quickly, but there's 21 apartments in Westfield. Average list price for a rental is $1,771. Average price per square foot for a apartment in Westfield is $1.72. That's a big difference between the single family.
Yeah.
And then this is what we were talking about. Now the days on the market's actually better, which is interesting, but the townhomes / condos, there's 37 of them, which is a lot. I mean, that is more than half of the single family homes available. So the inventory is pretty high.
Yeah.
I mean, that's a lot. That's more than half of the single family homes are townhomes as well. Average sales price 1990. That's interesting. And 54 days on the market, which is significantly better than the single family homes. And then $1.38 for the average price per square foot. So I think that's changed a lot over the last couple of months in Westfield. But I'm just kind of shocked how much inventory there is for townhomes in Westfield.
Yeah. So a couple of things I just want to mention here, and so a major reason of why it's important to work with an experienced property management company who's in tune with the numbers like this is because when you're seeing an average days on market for single family homes at 76, you absolutely need to be working with someone who is in tune with these numbers and knows how to react to these numbers so that you can beat those numbers, because just like Mike indicated, it is absolutely directly reflecting ROI. As we've indicated in previous market reports, there's a lot of competition. Now, one thing I want to mention that's interesting is this is the first market report we've done this month where the condos average monthly rental price is lower than your single family homes.
Yeah.
As I've
Yeah.
mentioned, as we've covered the other ones, all the condos have been higher than your single family home average rental price. Why that is, it's anybody's guess. Now, something else I want to mention here is month over month, our average rental price for a single family home this month is at 2,500. Last month we were at 2,400. So that indicates an increase of a 4.17 month over month for the average rental price for a single family home. Condos. Now, if you've seen all of our previous market reports, which I know everybody watching this is tuned into every single podcast video that we drop because you're interested in staying in tune with the market, you know that we've talked about how saturated the condo market here is in Westfield is, and this is absolutely a direct reflection of that because last month the average rental price for a condo was at 2025. So we have ticked down as far as your average rental price, where your average rental price for your single family home is up $100, your average rental price for a condo has ticked down almost $50 a month. So
Yep.
that's extremely telling and right in line with exactly what we've been preaching over the last several months about what's going on in the Westfield market. So, number one, I'm going to pat myself and Mike on the back for not only reporting the data, but the data also backing up what we've been saying for months. And also, I'm going to pat us on the back for reporting these numbers. And I'm going to pat you, viewer, on the back for watching this, for staying in tune with these numbers, because you're an educated investor for doing so. So I thought that was really interesting. The first market report we've gone over where your condo price is lower than your single family home, and mic drop.
Chris, you're really good at patting yourself on the back.
It's a skill I've been told that I have mastered.
No, Chris, you do make a good point. I mean, working with a property manager or knowing it yourself as a owner, it's so important to know. Oh, hey, I've got a home in Westfield. Geez, it's like almost panic mode.
Yeah,
Days on the market is 76. Like we need to get going on this. It's not just sit back and wait for the applications to come in. No, you need to be aggressive. Otherwise, they're not going to come in, and you're going to be that average, and we don't want you to be that average. So kudos to you for watching and make some moves based on knowing the numbers.
exactly. All right.
Let's
Enough of
do,
that.
let's do Westfield sales.
Let's look at it. Here we go.
Okay, Westfield sales. 42 days on the market. It's kind of in line with what we've been seeing everywhere else. Again, respectable. That is up, however, 20% month over month and year over year. I guess we don't have that number. $200 even on an average price per square foot. That is up for almost 5% month over month and almost 9% year over year. Impressive. And then the average sales price, $359,106. That is down both year over year and month over month. So that's interesting to see as well. And then 67 homes sold. And again, this is all under $500,000. So trending in the wrong direction or the opposite direction of what we've been seeing, I guess, other than Noblesville, but sales price going down, contrary to what I was saying at the top of the podcast about I think prices are going to continue to go up. Well, it turns out I was wrong.
For this market though, and so let me know if you think that this might be the case for Westfield. Westfield, and I think I'm going to be right because I'm looking at the number of homes sold with it, which is in our investor point of view, and you're going to see that that bar graph looks much different than we've seen in previous, right? Where it's kind of peaking at 300 and
Mhm.
350. Well, Westfield historically has been very expensive homes, right?
Yeah,
Well, with the
yeah,
construction boom that's happening, there's more affordable homes
yeah.
popping up in Westfield, which is going to skew some of these numbers where your average sales price might be ticking down, but not because your value is ticking down. It's because more quote unquote affordable homes are being built in this area where homes are historically half a million, or $1 million homes. There's more of your cookie cutter homes being developed in this area, which is skewing the data a little bit.
Yeah, there is. There's so much building out there. It is
Yeah.
head spinning. I mean, it is crazy. So yeah, that's definitely affecting things. But you can see, I mean, again, going back to that bottom right graph, for me, I love it. You can just see how affordable is this area. It's certainly less affordable than Noblesville. Look, 0 to 200, there's only 4, and it's on par, less than Fisher. So this is not, I wouldn't think of Westfield as an affordable or a value play, I should say. It's still
Yeah.
affordable. I mean, 350, honestly, if you're in California and you're watching this, you're drooling at 350. You know what I mean?
Exactly. Yeah, and if you watch previous market reports that we've done, economic reports, that is, what's going on in Westfield, the massive Grand Prix
Yep.
expansion that's happening. So, if anything, man, talk about an appreciation play. If you can get one of those cookie cutter, more affordable homes, man, as far as an investment, now this is going to have the same play that you're going to have in the Fisher's Caramel Market. Your quote quality applicant is going to be much easier to find. Your turnover costs are going to be very low in this area. Um, and your appreciation play is going to be much higher in this area, I think, as time goes
I
on.
think in the long term, I think in the short term, no, just because there's so much building going on right now.
Yeah,
But I think in the long term, absolutely, this is going to be, you're going to see great appreciation here.
yeah, yeah, I completely agree. Okay, ready to keep moving?
Yeah, let's do it.
Good, good, because this market's too pricey for me. Here we go. All right, Greenwood. Here's my Noblesville twin or sister or brother or however you want to look at it. Number of homes currently in the Greenwood market for February 2025 is 72, which is down 28%. Yeah, last month we were looking at 100 active homes on the
Mm.
market. So active homes is ticking down. Let's see if there's any other numbers that are going to help us explain that. So average rental price, it is up year over year, but down month over month by $50. Last month we were at 1850. This month we are at 1800 as your average rental price. Average days on market is at 50, which is ticking up from 45. Now that is a little bit surprising that your average days on market has been Greenwood is ticking up, because Greenwood, I think, is a really, really good market. Homes tend to go really quickly in this market. Average price per square foot is $1.06. Now, apartments, wow, look at this. So we've got apartments and condos there. So the first numerics there at 42, that's going to be your apartments and your condos, which is going to be a very skewed number. So hold very little. This data is going to be, well, built on one unit. So I would hold little water with this data is what
Yeah.
I mean to say. So 42 active apartments currently on the market at an average rate of 1287. And then your condos, one condo currently on the market. So maybe
Nobody.
if you're in the condo construction business, you might be looking at Greenwood to start building because it's got one 1699 as your average rental rate, which I'll bet that's exactly what that one unit is marketed at, and your average days on market at 79. So whoever holds is owns that one property is frustrated because they've been on the market for 80 days.
It's like, I'm the only one on the market. Why am I not? Why does nobody want to rent
You better
it?
lower that rental rate, buddy. Okay,
He
your
needs your
single
two
family
ten.
home, single family home graph there is awesome. It's ticking up, our sneak peek into March, which really means nothing because it's too early to tell what's going to be happening in March until we come to that rental market report. And then those other sweet little graphics there until you look at that townhome one. Again, look at that. It's like the St. Louis arc right there.
Oh.
It's depressing. That one owner is looking at this market report and he's like, "That's me. That's my business model." All right, that's our rental market report for Greenwood. Mike, anything to add here? I don't have much to comment on this one. I think we've kind of beat it up. If you're just tuning in for the Greenwood market report, you definitely want to tune back where we dropped a lot of information on the previous market reports, or watch the whole video in its entirety, which you can find on all of our social media channels there listed at the bottom for your convenience and consumption. Anything you want
Yeah.
to mention on this one?
No, I mean, I think it's good. It's positive. I mean, days on the market is up, but it's still only 50 for February. Again, 50 is a little high, but it's February. And year over year, month over month, rental price is heading in the right direction. So, I mean, maybe a little boring this month, but still positive.
Yeah. Yeah, a little bit boring, Positive. I mean, days on market is the number I love to watch, and when I
Yeah,
see really anything over 30 is not what I enjoy, but
of course.
I
Yep.
understand why it's higher than that for anyone that has a property under management with any other company is gonna see much higher than that. Am I right? All right, moving on. Here we go.
Well, and just I know we commented on this before, but in case some viewers are just catching on now, but it does highlight the importance of trying to get on that spring and summer leasing cycle. We here at Red Door, we always push when we have renewals, when we have vacant properties. If you have a vacancy in December, January, February, we're always approaching tenants to see, hey, interested in a 14, 16, 18-month lease to get on to like at least past March or April. It just makes such a big difference. And you can see it in the graphs where you're actually going to get more on a monthly basis. If you can rent your home out in May, June, and July, you're going to get more on a monthly basis. You just are. The averages are just higher. So it's so important to do that and make those moves with this market knowledge. Again, another reason to tune in is to get more on your average rent because you have a vacancy in June instead of February.
You're absolutely right, and we don't do this podcast really to try to tout Red Door, although you will find me doing that sometimes because it's just by habit. And we have other property management companies that also view these market reports because they want to stay in tune, and kudos to them for doing that. But yeah, if you haven't addressed this with your management company, that what are they doing in order to try to achieve that seasonality turnover time? You absolutely need to be asking that question because maybe they don't do something already, and they need you to push them in that direction because you absolutely should be trying. Now, I mean, you don't want to extend your vacancy overwhelmingly or turn or necessarily have a negative effect on your tenant retention in order to do so, but you
Yeah,
should be making efforts to try and achieve that
absolutely.
seasonality turnover. Yep. Yep.
Absolutely.
Okay. All right. Let's get into the sales data for Greenwood. Average days on market is at 80. Wow, that's ticking up from
Ooh,
54 where we were last month. Yeah, that's significant. So average days on market here in Greenwood is at 80. And wow, man, jumping over to average sales price, which is ticking up 9%. Wow, this is man,
weird.
prices are going up, aren't they? Man, we are getting closer. Who does Greenwood think it is? It is ticking up closer to the Fisher's price point. Who
Yeah.
do you think you are? Average price per square foot, 153, which is down month over month, but your average sales price, like I just mentioned, is up almost 9.5% to 329. Homes sold is up 25% month over month. Oh my gosh. I gotta say, I mean, these are cool numbers to read, but it is kind of indicating that I might have been mistaken on my prediction, which I don't like because, like we just mentioned, I love patting myself on the back, and I'm having a hard time doing that with these numbers. So, I mean, it's not here yet. We'll see where we are next month, but average sales price over time, you're seeing it tick up. It's an awesome little graphic there. And as we've mentioned already in previous market reports here, the average home number of homes sold rather in each individual price point. So from 200 to 250, 204 homes have sold over the previous year. And same thing as looks like the top of the market there, 250 to 300,000. It looks like the sweet spot. But this is your investor point of view. So anything that is sold from zero to $500,000 is what we can call the investor. We can call that the investor point of view. So, Mike, anything to add here?
I mean, other than days on the market, it looks like Greenwood is hot right now. Geez. So it'll be interesting to see what happens. I don't understand if we have that much of an increase in homes sold and average sales price, why days on the market would be up that dramatically. But we'll keep an eye on that. The only other thing I want to mention on this one is I feel like all I want to do is talk about this graphic this today. But
I know,
that
right?
bottom right graphic,
When the I know, I'm really enjoying it too, yeah.
well, so because look at Greenwood. So Greenwood again for me is a little bit more of a value play. But you look at the average sale price and you're like, Mike, you're crazy, but it's still 329. But if you look at that graphic, and this is why we do it, I think this it has the most in that under 200. It has
It does.
87 under 200,
Yep.
and then 200 under 250. So you can see just from that graphic that this of all the communities that we've talked about so far, this is probably the biggest value play. You're going to be able to find probably a reasonable home under 250. I mean, there's 200 and well, 300 roughly that have sold in the past year under 250. So that means there's homes available under 250 in Greenwood.
Absolutely, and like we've mentioned already, Greenwood, it's only a matter of time. I joked there at the beginning of this with the average sales price kinda ticking up, to match a market like Fishers, but they absolutely want to be a market like Fishers, and, whether whether ultimately will be or not, I think it's going to absolutely trend closer in that direction. So when you can pick up a home at 200 and 250,000, so many available options between 200 and 250,000, with the average sales price ticking up almost 10% month over month. This is a great market to jump into.
Hmm.
So if you're a new real estate investor, you should be looking at Greenwood as an affordable entry point for sure.
Yep.
Yeah. All right, that's going to wrap up our Greenwood market report. Let's jump into Anderson. Mike, I'm going to let you take Anderson.
Okay. Man, we've been talking about Anderson for a while, kind of up and coming. I actually just saw a news article about what was it? Can't remember the company, but some company's putting a plant there. They're going to add a couple, 300 jobs over the next couple of years. So positive. I mean, that's the one thing that Anderson has been lacking, right? Is like
Yeah,
positive
major
economic
players.
activity. Yeah, yeah. Major players, economic activity. And it's just kind of been bleed over from Fisher's Noblesville. So it's cool to see some stuff happening there. Hopefully, we'll see more and more of that. But getting into the numbers here. So talk about value play. I mean, Anderson is a total value play, and you can see that with. I'm going to jump around here a little bit, but average rental price 1,050. We finally broke $1,000. Amazing. We were at like 899 last year. Now different data set, and I think that probably has to do with breaking out apartments. Obviously, you can see that, and we'll go over that here in a second. But single family homes, the average rental price is 1,050. There are 61 active homes on the market, which is actually down a little bit from last month. Days on the market, a little high for my liking. 56 days on the market, up from last month. So I'm not loving that number. We'll have to keep an eye on that. 56 is a little high, even for February, just a little high. $1.03 is the average price per square foot for single families. And then I think it's worth talking about apartments because there's a lot of them. That's a huge number. I mean,
Yeah,
triple the amount of homes or there's triple the amount of homes for number of apartments available. 174 apartments. And then talk about value play. The value, or sorry, the average rent $694 for an average price per square foot of $1.23 on those apartments. So that is. We don't have days on the market. That would be interesting data to have to see how that
yeah.
differentiates from single family homes, but we just don't have that information. So, but that to me is very interesting to be looking at that to see how many more apartments are available and the price difference between them. I mean, 700 versus 1,050. So that's really interesting. And then going down to the two graphics there, the sneak peek into March does not look great if that stays true. It's hard
Oh,
to avoid that little frowny face, like ooh. But we'll talk about February's data, and it's up over last year and over last month. So we'll stay positive on that. We'll talk about it next month.
yeah.
And then apartments and condos. Actually, that's interesting. So that is down year over year. So that is not an awesome trend. And I we haven't been following this enough and haven't broken out apartments to know, like, is that a lot? 180? It seems like a lot to me, I got to tell you, but
I
we
know.
don't have the history to say that. But the numbers, average rents are going down on apartments in Anderson. So that's not awesome news for apartments.
No, well, I mean, honestly, I'm a little bit surprised here with the single family homes looking as low as it is. I mean, you're down year over year by almost 9% on your average rental price, which shocks me. The year over year data point there down almost 9%, because man, it seems like in my memory is not stellar these days, but I swear, wasn't it like 900? We were watching
Yeah,
that
but
and we were
remember last year it was a different data set. But I think that's going to be a typo, Chris, because look at the graph. If you look at the graph last year. Oh no,
no.
sorry,
Yeah,
no.
I know. Yeah, you were
You
you
know
were
they,
looking at
they
the
kind
light
of
blue line.
combined.
I
Yeah, they
know.
kind of combined. So I got confused there. But no, sorry, I take it all back.
Yeah, yeah. So and that graph can be a little bit misleading. So I do want to mention, because I mean you're talking about $50 difference in between those numbers, which makes that downward slope, that dangerous downward slope, look more significant than it really is. I mean it is significant, but it's I don't yeah.
And you've also got that same thing that we saw in what was that Noblesville, where we had that weird peak in February. I mean, that's
Yeah,
weird. Something happened in February last year, like a solar flare or something, and rental prices peaked. I don't know what it is,
yeah.
but That's not normal to
The,
peak in
the
February.
election, January 20th, and the transition going into. Oh wait, no, we were talking about last year, aren't we? Okay, all
Well,
right, that's enough for Anderson. I mean, yeah, I can't wait to continue to keep an eye on this. I kind of like that little market temperature there. I know where we pulled that, and that's interesting.
yeah.
I wonder why we included that here on this graph. Do you happen to know why?
No, I don't. I do not know why
No.
we included that.
Yeah.
I will say those tend to be, in my opinion, lagging. Uh, from somebody with boots on the ground, it's like by the time it's hot, it's already over, and when it's
Yeah.
cool, it's a lot of times it's time to buy. So I don't know if I would call it Anderson hot. I'd say it's emerging, and I would say it's um, a value play and a cash flow play. If you want to try to get a home that cash flows, Anderson might be the first place that I would look, because
Yeah.
in all the other areas, it's going to be very difficult unless you're going to put in a lot of work and find a rehab. But I think in Anderson, you could actually, you might even have to do a rehab there too. But I think you could actually potentially find a home that is going to cash flow in Anderson. So if that's what you're looking for, that's where I'm looking for Anderson.
Yeah. Yeah. A major rehab or a lot of cash down.
Yeah. Yep.
Okay. Let's get into the sales data here for Anderson.
Okay, sales data. Talk about affordable. Look at this. 190 is the average sales price. Oh my gosh, I can't not talk about it already. Look at that graphic in the bottom right. In the bottom right. Look at it. Oh my
I
gosh.
know that is weird. It's like that's got to be a mistake. No, that's
It's
Anderson
like
for you. So
opposite. Exactly.
this is exactly why we report on Anderson. It's a different market. We're giving you angles from
Yep.
all different markets, and
Yep.
yeah, that's exactly what we're doing. We're doing this for you, the viewer.
Yeah. I mean, look at, there's only 4 homes that sold between 4 and 500. I mean, it's just a different market. It's a different market. It's a different clientele. It's a different everything. But it's also, a potential positive cash flow, and it's got probably way more upside potential. I mean, if something big does go in there economically, it could really boost Anderson. But it's a little bit speculative, and it's a little bit on the outskirts and emerging. So it's not as tried and true, but it's also only average sales price of 190.
I know. Let me derail us just for a minute. I want to tell you about a conversation I had just this morning with a guy. Um, and he was looking at a property. And you could tell he was a new investor. In fact, during the conversation, he mentioned several times, "Hey, it's an investment property. I don't really care." Which which is not something, even as your property manager. I don't just I don't want to hear that,
Yeah.
right? I mean, this
Yeah.
is an asset that you're acquiring. You should probably care. But
Yeah.
the property that he was looking at acquiring was on Post and 38th,
Mm.
which is a rough market. You happen to have a lot of turnover. Your turnover costs.
Yep.
All the high points that I mentioned that kind of indicate a good investment property is where you're going to probably see a lot of those in more negative light in that area. High turnover
Yep.
costs, a lot of turnover, eviction costs.
Theft.
But and theft. Yeah, that's exactly what I said. Theft, squatters,
Yep.
broken windows. You're going to see a lot of that. And I was like, sorry, you probably should care about that stuff. And so we ended up on the conversation where the property that I had to just tell him, "Look, we're probably just not the right fit." But
Hmm.
um, anyway, the whole point of that is to mention the idea that he was looking for was a low entry point. I'm sure that's exactly what caught his eye. And you know what? I'm going to kick myself now is because I should be able to identify that and say, if you're looking for a low entry point, look at the Anderson.
Yeah.
You can get in at a lower entry point and avoid all the nightmares that I just mentioned, and
Yeah.
maybe care a little bit about where you're about to put a significant amount, or at least most people's significant amount of financial resources into an asset in order to generate a return. Anderson is probably the market that I would encourage you to look at way before, um, an area like that. So
Uh, Chris, that is an excellent point. I don't know why I never thought about that, and you need to add that to your sales tool bag, right? But no, you're right. I mean, if you're looking for that that lower entry point, oh my gosh, I would so much rather own a home in Anderson or Ingalls or some of these outlying areas. You're not going to have, not that it doesn't exist. Of course, it's always a risk. Eviction is always a risk. Theft is always a risk, but it's less there. And so many times when those investors are looking for that value play, you're right. They don't, it looks great on paper and it's like, oh, my ROI is going to be X or whatever. But you really do need to factor in higher vacancy, eviction costs, theft costs, squatters. I mean, somebody stealing your refrigerator. I mean, all of those things go into it, and it matters at the end of the year when you're calculating it up. It definitely matters. So that's an excellent
Yeah.
point, Chris.
Yeah, even having an amazing property management company like us, that still isn't gonna save you from those risks, that you're
Yeah.
going to find there. The advantage of talking to someone like us is we're gonna be upfront and honest with you about those risks where others may not be so transparent. So
Yeah.
there you go. If you're looking for an affordable entry area, look at Anderson. Talk to somebody who's experienced in the market who can give you some insight rather than a much riskier asset location like some of these other areas. So
Speaking of, we kind of got sidetracked, but my gosh, have you seen these numbers? Like 190 average year, or sorry, up 25% year over year.
mm,
My
so you're right.
goodness.
I derailed you there early on because I wanted to get that. Yeah.
Oh
So
man,
we did.
you got to get in now because holy cow, that is
You aren't going to see that on
unbelievable.
Houston 38. I can guarantee you.
Now that does seem a little bit high. I'm curious to see if maybe a couple affected it because, if you look at the trend line there, I mean, it's definitely heading up in the right direction for sure, but it's definitely a huge departure from where we kind of ended December and January. So I don't want to get too excited about that, but it is trending and it is trending in the right direction. It's going up and to the right. And so that's good, but I would temper it with maybe a couple sales kind of got skewed there. So, but it is heading in the right direction.
Yeah.
Let me just wrap this up here because I feel like we've been talking about Anderson for a while. But so 190 average sales price, $130 price per square foot. Days on the market is 63, and we've already done a deep dive on the bottom right graph, just showing how affordable that market is.
Good.
That'll
All
wrap up
right. We're
Anderson for
gonna
me.
That's good. That's Anderson. So there it is, the information. That's what's going on in Anderson. We'll continue to watch this market. Be sure to stay in tune. All of our social media channels there are listed at the bottom of this graphic. So check that out and make sure you're in tune with what's going on when we get into March's market report. All right. Here we go. All right, we're about to jump into our West Side Roundup, which is going to include our markets of Avon, Brownsburg, and Plainfield. I am going to bounce through these pretty quickly, and I'm just going to spout off some of the data that's indicated on these graphics. Mike, feel free to throw a hand up if there's a comment you want to make on any of these markets. But there's a ton of new construction. I mean, I could say that about any of the markets that we report on, but that's certainly true with what's going on the West Side. I talk to more and more people every day, more than I do on average, that are investors that are picking up properties here on the West Side. So these numbers are going to be important to you. So stay tuned. All right, West Side Roundup, Avon, Brownsburg, and Plainfield. Number of active homes here in Avon. And let me also mention the reason we do this as a West Side Roundup is because although it covers a large swath of the west side of Indianapolis, these gets are so similar. And I would imagine, just like in previous market reports, you're going to see a lot of this data look very similar as we get into each and every one of these separate markets. So we'll see if that continues to be true this month. All right. Number of active homes here in Avon is at 28, which is up 16%, which is really just up from 24 last month. Your average rental price up month over month, almost 4% at 2025. And your average days on market at 29, which is our lowest from all the market reports yet this month. That is super freaking low. Average sales price per square foot, $1.03. All of your nice, neat graphics there for your consumption and digestion at your convenience. And then, of course, I jumped over our apartments and condo, which I have done consistently this month. So 16 apartments here in Avon at 12.96 rather for your average market rate, $1.40 a square foot, and your three active condos, which were up from one actually last month. So wow, this market is really booming for condos. They're putting them up everywhere. Just kidding. We're only up two more. Your average rental rates at 2050, average days on market consistent with single family homes at 28, and then again your graphics there for your consumption. Anything on Avon, Mike?
No days on the market though. I mean, what
I know,
29 for
I know.
February? That is unreal. I mean, I think we've seen that. I don't have it in front of me, but I think we've seen the West Side has always had really good days on the market. So it's just, I think we got more of the same coming this year.
As these markets continue to grow, we might think about slowing these down just to get a little bit more verbiage on each one of these markets. But we can talk about that. Talk about that later. Let's get into the sales data. Average days on market is up 3 days, up from 50. We're at 53 month over month. $164 is average price per square foot. Average sales price within your investor point of view at 340, 136, which is up almost 7.5% month over month. Number of homes sold, 32 homes. So man, up 18%. That's yeah, a lot more construction happening on Avon and Brownsburg. I would imagine we're going to continue to see those numbers tick up. And then you have that awesome little graph there, number of homes sold in each little price bracket within that investor point of view uh, that we offer. All right, Brownsburg, number of active homes, 25. Again, very similar to what we've already reported here happening in Avon. Excuse me. Average rental price at 21.50. Average days on market at 35, which is still an absolutely stellar number. Average price per square foot is under $1. You're at 89 cents per square foot, which is a little bit lower than what we're seeing in these other markets. Your apartments, you have 12 condos, 2, which these are very low numbers and very low numbers that are going to reflect in the data points here. Um, your average days on market, though, at 19 for a condo in Brownsburg. So if you're a condo lover as an investor, Brownsburg may be the market you should be looking at. And all of those awesome little graphs there at the bottom for your consumption. The sales data, average days on market at 52, up from 51, which is very little change. Average price at 187 per square foot. Average sales price for your property in Brownsburg is going to be up 3.25% month over month, $316,000 for your average sales price within that investor point of view, and the number of homes sold right at 30, which is up 7%. Down year over year though, which is a little bit shocking, but and then again, your graphic there for your investor point of view, ready and available for your consumption. All right, to wrap up our West Side Roundup here in Plainfield, and then I'll give chance for Mike to say something. Should he have something to say? Number of active homes in the market at 31, up 24% month over month. Average rental price at a flat $2,000, which is just down actually $16, which is virtually unchanged. Average days on market at 37. So just as we indicated as we started this West Side Roundup, I mean, all of these numbers are so close to one another. Your average price per square foot at 101, and then your condos are non-existent here in Plainfield apparently, and your apartments, you have 25 apartment units at 1253 is your average rental rate. And then we have your average rental price over time available for your consumption with our awesome little market temperature there in the bottom right hand corner, which we have decided to put up randomly. So it is a warm climate there for you in Plainfield. So there you go. The West Side Roundup. Michael, give you a minute. What do you want to add?
Well, you got to do Plainfield sales data first before we can actually round it up. Don't we have Plainfield sales data?
I don't think there's ever a time that I've gone over the West Side Roundup and closed it out perfectly, right? No, I've always left out one
Always
market
something.
or
There's always something.
yeah,
It's a
I
lot.
always get something. Yeah, I just fly through it so fast. All right, Mike, you're absolutely right. Let's go over the sales data. Your average days in the market for a property here on the sales market is 69 days on the market, which is up 40%. Yeah. So let me see. Yeah, we're up from 49 the previous month. Average price per square foot at 172, and your average sales price at 320, which is up just over 1.5% year over year. So yeah, still pretty consistent with our Avon Brownsburg markets. Number of homes sold is up 150%. There must have been a lot happening in Plainfield right now with a month over month change at 150%. Year over year, it's up nearly 100%. I mean, it is an expanding market. I know that, but Plainfield's also an older market, isn't it? I mean,
Yeah,
it's an older
there's an older
town.
section. There's an older section for sure.
Yeah, okay, yeah. And then again, there's your graphs down there where Plainfield is honestly, I mean, we talked about markets you can still get into where your average sales price is looking above the $300,000 price point. I mean, man, you can still get into Plainfield here just
Yep.
as easy. I mean, gosh, what is it? 82 homes selling between 200 and $250,000.
Yeah.
That's that's an
I
affordable
mean,
market too.
almost. I mean, 100 homes sold under 250. I mean, that's a lot.
Yeah.
That's a lot to choose from. So that's an affordable market, and that's what I was going to touch on was that. I feel like that's my theme this time, so I might as well that. And you could
Yeah.
see it so quickly with those graphics. You see of the three West Side roundups that we just went over in order. It goes Plainfield is the most affordable, then Brownsburg, then Avon. Based on that anyway, if you want to call it that. But so anyway, I love that. I love that graph. The only other thing, Chris, I want to mention is to for the viewers to go check out the economic update. What are we calling it nowadays? The before we did this, we
Economic report.
economic insights.
That's
Yes.
it.
And one of the articles that you chose to highlight was Brownsburg, and they are doing a build to rent community in there, which is going to
Great
add
connection.
to the inventory. So definitely something to be aware of if you have or are thinking about picking up a home in Brownsburg or on the west side. I mean, I haven't seen the graphics. I don't know where they are. I don't know what the timing is, but that's going to impact the inventory on the west side for sure. So go check that out. Check out the article and make yourself knowledgeable about that.
Absolutely. Yeah, I'm so glad you tied that back around to that article. Well done. And I can't wait to see, and I'll have to look back at the dates on that expected completion date, but how those are going to skew the market report numbers. So yeah, you have a home in Brownsburg, or you're an investor who is currently under construction with a new investment property. Because I've talked to a lot of you. I know that there's a lot of you out there. Then yeah, that's something to be aware of. Stay tuned with the market reports. Maybe we'll talk. I'll discuss this with Mike. Maybe we'll slow these down a little bit so that we can kind of stay in tune with these West Side markets just a little bit more, rather than flying through some of the numbers. Which we do that just because these markets are just so connected. But of course, as these markets continue to grow, that will begin to change a little bit
Yeah.
over time.
We'll need to, I mean, I'm sure it'll be, I think they just announced it. So I'm sure it'll be
Yeah,
6 to 9 months before these are on brought on
maybe
online. And I'm sure they're not going to bring them all on at once. But, Brownsburg, and they're all kind of smaller markets. I mean, I think they have like 20 or 30 or 40 homes typically available on the market. So I mean, if you have a community that's going to add, I think it was a couple hundred, it's gonna impact the inventory for sure. So
yeah.
anyway, but we'll see it over time.
All right, sounds good. I believe we've got Whitestown next. So if you're wrapping up on Plainfield, be sure to check out the other market report that we are about to get into. Whitestown. This one's
Yeah,
you.
Whitestown, the super northwest corridor that we're starting to, not after the west side roundup, the northwest side corridor roundup.
Yeah, we're gonna have to work on that name, that's for sure.
That's a mouthful. All right, Whitestown. For those of you who don't know, it's kind of just geographically, it's located just actually kind of north of Brownsburg, or Brownsburg and Indianapolis meet on the west side of town. 65 heading up towards Lebanon, and lots of growth out there. Lebanon is experiencing tons and tons of growth, and Whitestown I think has had a ton of growth in the past, and I think is kind of having another resurgence from Lebanon. So anyway, here's the numbers for Whitestown. The average rental price, let's call it 2,300, 2,299, up both year over year and month over month, 4% for month over month, 3% year over year. There's 23 active homes on the market. That is up slightly, but it's only 23 homes, so I'm not super concerned about that. Days on the market, a little high, 50 days on the market. Shockingly, that's down 15% from last month. So definitely need to keep an eye on that. That's just a little high for my liking. Average
Mhm.
price per square foot, 93 cents, which is up month over month. And then pretty limited activity. I mean, on townhouses, there's one. There's not even worth talking about that. 8 apartments for rent, certainly more affordable at the $1,750 price point, and $1.42, obviously much more than single family homes. So $1.42 price per square foot for apartments. Again, I would kind of ignore that bottom right townhomes one with such
Yeah.
limited inventory is probably not even worth talking about. But the graphs for apartments and single family, single family is up year over year. March is maybe dipping. We'll just have to see what happens. So good news for now. Days on the market is a little concerning.
Yeah, days on market is, I mean, it's a little bit concerning, but this is Whitestown, right? And I feel every time we do one of these market reports for Whitestown, I think it's important to mention the type of town Whitestown is. I mean, these are big homes historically. Now there is a lot of new construction happening out here where you're getting a lot of those smaller, again, quote unquote, more affordable homes. Check back to our previous market report to understand where I've mentioned that before. But when you're looking at an average rental price, and I like sometimes mentioning some of the silly things in some of these market reports, and maybe this is one of those that I'm going to mention here. But the average rental price at 22.99, so 2,300 a month, which is high. I mean, that's one of the higher rental price points that we've seen out of all these market reports, but your average price per square foot is under $1. So
Yeah.
that tells me that your average property in Whitestown's big,
Yeah.
right? A lot of square footage happening out here, 2,300 a month. So these are bigger homes. And number back to it's an expanding town. This is a ritzier part of the Indianapolis surrounding area. Agree or not?
Yes and no. I mean, it's certainly a nice area, but I think most of the areas that we highlight are, I don't know if I call them ritzy, but they're in the nicer. I mean, they're not 38th and Post. I'll tell you that, because of the reasons that we talked about earlier. That these areas tend to attract higher quality tenants, which is less vacancy, less turnover cost, all that kind of stuff. So, yes, yeah, it can be, but I would say Fishers is more than Whitestown, for example.
You would? Wow,
Yeah,
okay,
you
all
wouldn't?
right. I mean, I don't know. I don't think so. I don't think so. I mean, it's tough to compare the two, right? Fishers is a much larger community, I think, than Whitestown, right?
Yeah. Oh, yeah, yeah,
Okay,
yeah.
okay,
Way
okay,
bigger, way bigger, way bigger.
okay.
All right.
Well, that's I mean, that's
Let's look at the sales data.
yeah, let's all right, yeah, move on, move on. All right, that's your rental data here for Whitestown. Let's see what's going on in the sales data, and we'll see if it's ritzy or not. Here we go.
Yeah, let's see. The numbers will tell us, Chris.
Yeah, yeah.
All right. Well, I guess it is. Sales price 362,
I mean,
429. I mean,
is that not our highest of the day? I think it might be.
and I mean, look at the number of homes, my graphic that I got to talk about every time. Look at the number of homes under 250. I mean,
You
five,
aren't getting
six.
you aren't
No,
getting
no.
7,000.
You
Yes.
better, oh, yeah. You better get a raise before you coming over here. So I,
Yes.
I stand corrected. I stand corrected, Chris.
I mean, to your point though, it's not. I mean, that the number of homes sold it is skewed a little bit towards the higher price point, but not as much as I honestly thought it was going to be. Your average sales price is higher than we have seen in these previous market reports, but not as high as I was
Yeah.
kind of alluding to. All right, I'll let you take over. Sorry.
All right. Average sales price 362. That is actually down month over month, 6%, but up year over year. Price per square foot is 169. Again, down month over month, but up year over year. Days on the market 71. That's maybe the highest that we've seen so
I think so.
far. I think it is by a pretty good margin. I think the one we saw was maybe 60, closer to 60. So anyway, days on the market is pretty high. Number of homes sold, not a ton, 24 homes, and again, we put this cap at 500,000, so it does skew that there just a little bit. And on the bottom left, average sales price over time, you can see this year is up, but trending in the wrong direction. That looks like a pretty steep dive. I don't anticipate that's going to continue, but we will see. And then we've kind of already talked about that number of homes sold. It is a. I mean, it's definitely not a value play. Whitestown, that's for sure.
No, and that's a small. I mean, really, it's a small number. So 24 homes that have
Yeah.
sold, and so I think some of this, again, when you see major changes in your month over month and your year over year, it's typically indicated by something, a particular property or two having a
Yeah.
dramatic effect on the numbers here. And I would expect that's exactly what's happening here in
Yeah.
Whitestown because your average days on market last month was at 34, and all of a sudden this month we're up 108% at 71. That's
Yeah.
probably just being skewed. So it's the data collection over a significant period of time that you're going to want to pay attention to, especially in these smaller markets, like I mentioned too, even in ritzy areas like Whitestown.
You had to throw it in there, didn't you? No, you're
Let me
right.
know.
There's only 20 homes that sold, so a couple oddballs can really skew the data for sure.
I think that wraps up Whitestown. We'll get into Lebanon. You're going to take Lebanon, and if you're still on Whitestown, so this is the corridor that we're talking about that's driving us right into the newer market that we're reporting is on Lebanon. So if you're watching this in a short or in a reel, you're going to want to click on the Lebanon market report because it's not so ritzy. See you there. All right, here's Lebanon. I think typically you're the one that reports on
Go for it.
Lebanon.
Let's mix
Okay,
it
all
up.
right. All right. I was getting bored over here, so I'm gonna start talking about Lebanon, an affordable market for you to dive into, I'm sure. So let's see if the data is going to indicate that. Number of active homes currently in the Lebanon market is unchanged month over month. You have 13 active homes currently on the market at 1795. Look at that jump. We're up from 1595 month over month. I can't wait to see. I love watching this market. As we've continued to talk about month over month is all the economic development that's happening in the Lebanon market. And I know that it's driving because I've spoken to them and you currently watching this video of new investors that are entering the Lebanon market. I mean, there's a ton happening there. It's an amazing market to jump into right now. Average days on market is at 48, which is up 14% just from 42 from the previous month. It's still on the lower side of what we've been seeing trending here and what's happening around the Indianapolis and surrounding suburbs. So 48 is still not a horrific number to be looking at for the month of February, and I would absolutely expect that to continue to trend down as we get into seasonality in March. Average price per square foot is just down as it's on $1.14 is your average price per square foot. And then, of course, you have the condos and apartments. Excuse me, let me say apartments and then condos because that is what the graphics would indicate. Apartments there above condos, and apparently we have zero condos on the market. But what's odd is we have an average price per square foot over there at $1.02, but we have no condos that are indicated in the data to indicate where that $1.02 is your average price per square foot. Apartments, we have 38 average, or excuse me, 38 active apartments on the market at an average rental rate of 1321. And then now we're down to the graphics, your single family homes, your apartments and condos, and your market temperature brought to you by Red Door Property Management. That's your rental market report for Lebanon. Do you want to chime in on this? Tell me where that average price per square foot comes from at $1.02 when we don't have any condos.
Yeah, that is kind of weird, isn't it? I
Yeah,
don't
it's kind of
know.
strange. Yeah, okay,
Maybe a leftover.
probably.
No, I mean, Lebanon is such a uh, potential, such a hot thing. There's so much going on up there. Um, we're going to just talk about Lebanon more and more as time goes on. I talk to investors interested in this area. It's a booming area. There's a lot of money going in there. So yeah, I think it's going to be all the hotness in the next 5 years.
Yeah, continue to watch this market report. This is one that typically gets the higher number of views month over month, and I can completely understand why, knowing what's going on economically here in this market. And in case you didn't catch the Whitestown market report, it is fed to you through a ritzy area in Whitestown. Jumping over to the sales data. February 2025 sales market insights here for Lebanon. Average days on market 30 days, which is down from 43. So homes are selling a little bit quicker here in Lebanon. Average price per square foot is $842, which is down. And have your eyes already gone to the number of homes sold graphic there? It is, man, that is such an awesome graph. I love that we started doing that. That was such a genius idea. And how different this marks. I mean, if you caught the market report for Whitestown, it was trending the other direction. But you can jump into Lebanon just down the road there, and you're trending a lot more affordable here from 200 to
Yep.
250,000 being the meat of the market there at that price point. Number of homes sold though, down month over month. So 12 homes sold where we were at 15 the previous month. Mike, I'll let you chime in here. Anything you want to add?
You know what's interesting to me is that the average sales price now, we said Anderson kind of had a weird month where it was like 190. So I think it's probably going to like settle at like 170 or 180, but it's not that different in terms of the average sales price. It's like not that much more to get a home in Lebanon. Um, and I just think there's definitely more um activity.
Potential?
There's more, yeah, potential. I think more excitement around Lebanon versus Anderson. So I don't know. I'm just kind of curious as to how close it is in terms of the average sales price. Now I think there's a lot of new construction going on in Lebanon, and so I'd be curious to see if we could somehow tease that out. But I don't know if that a lot of that new home sales data is going to be in here. And I think that sales price is going to be a lot higher.
Yeah, I think so too. I mean, this is inevitably going to trend in another direction for sure,
Yeah.
which is why we wanted to jump in and make it part of these market reports a few months back so that we could watch that trend
Yep.
And I mean, that gives us kind of an idea. Maybe we should highlight some of these markets and pull, 12 months data and discuss the data over a 12-month period. I mean, that would be
Yeah.
kind of cool to kind of really highlight some of these active markets. Something to think about later.
Yeah.
Yeah. Well, that's going to wrap up our sales market insights here for Lebanon and all of our markets that we currently report on. If you're not already, you definitely want to be sure to like and subscribe. We add new markets all the time, but what's more important is all the data points that we continue to add that we added here this year, where you can get an insight into the sales data, you can get an insight into the economic data that's happening around Indianapolis, but of course, you can still stay in tune with the rental data, but you can definitely make an informed real estate investment decision when you're in tune with all of this information, which you can find on all of our social media channels there, nice and neat, laid out for your convenience there at the bottom of all of these graphics. Be sure to jump in and make sure you get alerted when we post all of these new market reports. And of course, if you have anything that you'd like to add, we'd love to hear from you. I mean, in fact, we've adjusted these market reports based on comments that we've received from viewers just like you. So be sure to share that when you have ideas or interested in other data points that you'd like to see us continue to report on. And that's a wrap. Mike, anything you'd like to add as we close this up? We're gonna have to cut that from the video feed, by the way.
Call me Mac.
Hey, Mac.
No, Chris, I think I'm good. I love this stuff. I'm such a geek. I love geeking out on property management and real estate. I love having this information. I love getting this to our owners, our potential owners, potential landlords. I think it's just makes everybody a better property manager, a better owner. So I just love it. I think it's awesome. That's it. That's all I got.
Thanks, guys. Thanks for joining us here at Property Management Podcast. We'll catch you in the next video.
See you guys.